Cannon, and this is my Go See It video for cash disbursements. This is Chris Kim, CFO of Fidelity Life. So since this interview is about cash disbursements, I like to begin with understanding how they're made here at Fidelity Life. So are disbursements made by electronic fund transfer or by check, or both?
That's a really good question, Allison. Obviously, cash and disbursement cycle, we call it treasury cycle, is an important facet to this company, mainly because it's probably one of the largest expense line item, and the volume of transaction alone takes that to a pretty high risk. How we disperse payments is really multitudes of different ways. First is check, right? That's our number one method. We prefer the electronic fund transfer just because the simplicity and the control that it provides. I think that's it. We do some wire transfers as well because of the nature of our transactions. I mean, reinsurance payments are in excess of millions of dollars. So rather than writing checks or doing ETFs, we do wire transfers depending on the vendor situations.
Since you said you use both, how do you decide which method to use?
So I mean, check is kind of the default method. Now there are certain vendors that require electronic funds transfer. We like those just because they're easy to pay. You don't have to pay stamp and all that processing. So it's really up to the vendor to decide. Now we're in process of migrating over to a different bank, and in process we may be putting in a new treasury management system whereby we may mandate that they take no checks but through electronic funds transfer, whereby they need to provide us the bank account, routing number, and everything else.
Okay. Yeah. And then these different cash disbursements are generally issued after following control procedures, so I'd like to learn a little more about control procedures here.
Sure.
Okay, so next, independent internal verification controls. So who reviews transactions beforehand to make sure they should be processed?
Sure. Let's start, before we go there, let's start with way in the beginning, which is the gatekeeping of our vendor management system. First and foremost, before anyone can be paid, they need to be entered into the vendor acceptance process. And we have an accounting clerk who does that, and before she can enter anything in, it needs to be approved, meaning number of different, like name of a vendor, what services they provide, W-9, and all the documentation has to be provided before we can actually add it into the system. And in order to do that, accounting manager has to review it, that they're accepted into the system. And then, we would get services, goods in, and sometimes they would have purchase order attached to it with receiving documentations. And then, we would confirm receipt of whatever that we purchased or services that are rendered, and accounting manager would review it and approve the payment process, and that's what's going to generate the payment to take place. So afterwards, accounting, before any checks are remitted, we do ensure that there's no duplication of payments, and even during the check cashing process, that's what's known as positive pay, right? I don't know if you've heard that before, but basically, if bank has knowledge of who we wrote the checks to, so if someone tries to check it twice, cash it twice, or is not on the vendor listing per the bank, it doesn't even get paid. So there's added layer of control at the bank where people can cash checks to ensure duplicate payments, unauthorized payments are not made.
And then what types of audits does Fidelity use? Who does them?
So there's multiple audits that take place. First and foremost, we have an internal audit department that performs SOX testing, so Sarbanes-Oxley testing, because we're in process of being a public company. So we look at key controls within certain cycles, whether it's financial reporting, treasury, operations, and what have you. And to the extent that we feel are risky, we would perform internal audit. Just recently we did a claims audit to ensure the payments that we're making to our policyholders are, have acceptable forms of documentation and evidence. We also have an external audit performed by Deloitte, a Big Four accounting firm, where they look at the overarching financial statements of the company, and they would conduct a number of different audit procedures. In this payable cycle, certainly they would look at bank statements, bank reconciliations, from AP that would ensure the completeness. Hey, do I have adequate liability on my books? In order to perform that test, they do what's known as look-back testing, search for unrecorded liabilities, and a number of other procedures. So those are the two main ones that we perform. And state of Illinois, because we're a regulated entity, they would also come in once every 3 to 5 years to perform their own testing leveraging heavily what internal audit and external audit has performed.
Okay. Lastly, I just have some questions on human resource controls. Are employees bonded and insured? Thus, the business will be able to recover from the insurer if
Yes.
thefts or cash.
Absolutely. Risk management is critical, and we do have proper insurance in place to protect the company.
Okay. Okay. Thank you for your time.
Okay, thank you, Allison.